Hello everybody, this is the third video of the price action series. If you're brand new to this channel, be sure to subscribe and join my price action expert telegram. So I provide regular updates here and I recommend you to watch the previous two videos of this series, so it would be very helpful. Follow the ideas and keys and be sure to follow the upcoming videos. Lots of new information will be updated in that. So this part of the video, it will cover major key elements, the few things which I'm about to show you, the finding key levels. As I have explained in my previous video, the first trend or cycle, which it starts from here to here. I just took some random low to high because from here it went up, it broke this high and went up. From here again it went up, so that is the reason. Here it retraced from the top, and this low again it went up, again it broke down. So it's a medium term continuation trend or cycle. It ends here. So usually what they do is they take the high and low as the support and resistance. This is support, or they call it as demand, resistance or supply here. So most of the traders, they take only one level here or upside or whichever they choose. So I would suggest you to take two lines. Later part of the video, it will cover how to draw the zones correctly in bottom and top prices, so the future market it holds there and decides like 99 or 98% of the time. You see here high, from here it didn't actually give any retracement once it touches the high, so it went on to make 2 days high, and after that it retraced. So let's take this high here. It did a little bit of retracement and went up. So this part it covers a bit here, but when you cover some other important levels, so that would be of very perfect. Take this one trend or on any trend. When you if it is in sell direction, if you take high and low of that particular current trend. If it is in buy direction, take that high and low. And this has some certain characters in any instrument, like how it behaves, like a support or demand or resistance, how the price behaves, and how it usually, it occurs in the future, or it gives clues in the future and its characters. So these are the 7 key characters which I have explained in my previous video. Just you can pause the video and read this. The price stops in the support and resistance area. You can see here it stops and then it decides. The second one is it reverses clearly. If it is in buy trend, when the resistance reaches, it drops. When the support reaches, it goes up. The third one is market price versus support and resistance by few pips and sometimes. Okay, when the price goes up to that particular level, it goes up and touches and comes down, and later on it does this. It doesn't go and break this or touches this. It just ranges there, and later bit it touches and drops. It's a pattern I have covered in my previous courses. You can watch that. The fourth one is it holds there for a long time. After that it breaks up, and from there it takes some other support on top and just keep pushing up. Same here for the bear trend. The fifth one is the price drops and goes up and retest and goes up. It basically a triangle. So you can here there's a triangle, there's a triangle, there's one triangle, again one triangle, it goes up. Okay. Type 6. We mark a line or a support or resistance. What usually market does is it doesn't hold there, it just keep breaking up and down. We think that it is not valid, but later after 4 or 5 moments what it does is it holds there. During that time, from there, when it holds, it takes a major cycle, and after that it goes upside. Only later part of that cycle is revealed when the market forms a higher low in that particular place. Until then, it manipulates a lot. It's one of a type of support and resistance character. So the last one is the market breaks up, it stays up for a very long time there. From there it comes down. Here also it stays a bit, and after that it moves up and continues in the same direction. You can see here my YouTube video. It's almost 30 minutes video of what are the characteristics of support and resistance I have posted. You have to watch this video if you want to understand this concept which I have explained you. The next video is here. You can see I have marked the high and low of 4 quarters of a year. You can take a Nifty or gold or any instrument. You have to divide that year into 4 quarters. So mark the first quarter high and low, the second quarter high and low, the fourth quarter high and low, the fifth quarter high and low. So that acts as a future support and resistance. I have marked and I have posted a video about this. It's very important, these two videos, support and resistance and HLOC, I mean high, open, low, close, 4 quarters important high and lows. So mark this in your chart and keep it always. The trader, these are the very important crucial key levels you must know and keep it in your charts, and you can see the future market how it reacts there, and it will definitely give you an advanced edge. And when you combine with some other ideas and factors, this is going to really helpful, because I use this method regularly in my trading. This is one of my few personal methods. They do watch many candlesticks patterns and they try to learn a lot of patterns, but the candlestick patterns, it is actually important, but the candlestick confirmation it gives and it can give us very major advantage. But those patterns, it should be in that support or resistance areas, or it should be in that character areas. By character, what I mean is the support or resistance character, supply or demand zone. So if it forms in that area, then it would be of absolute perfection and really helpful for us. That's a really good confirmation too. Before seeing that candle pattern, I suggest you to watch that video. Here you can see the basic candlestick formation. Many traders, they trade by, they do not know how the candle it forms, why the opening price is important, and how the price reacts there, and how the candle forms in a particular day. If you see this alone, most of the hedge funds, most of the algos, they use the opening candle as important price to enter and trade. You can see a lot of support and resistance in opening price only. When you are trading in that particular day, we do not know any high, low or closing price of that day. The only thing that is very confirmed is the opening price. So when we know that, we can use that to use mathematical calculations, geometry, and draw a lot of conclusions using that opening price. And if the basics of that opening is known, it will be very clear to go into the further courses. I know these are some old videos, but the information which I have given is very basic, and those are the core principles of trading. So we cannot ignore that. Even if it takes 100 or 2000 years, these things will not change. You have to know this. Things which I have shown you is very important. I will tell you some imparting here. See, these are the characteristics. Next, the candlestick pattern I will show you. Drawing zones, we will move on to the next. You have to take this low and high of any high and low and see that as one big candle. Let's say from here, this low to this high, December 22 around, okay, and this low is 17th June. So from here to here, let's consider this as one big candle. So that would be the opening price and this would be the closing price around here. Okay, if you think it as a dropping candle, let's say if it is in a sell trend, obviously it's in a buy trend, let's consider this as one candle and see in reverse direction. This would be some opening price and this would be some closing price around would be here. So you should take the whole trend and see that as one single candle and think that candle in both directions. Okay, so likewise you have to do this from here to here. Let's say it's in sell trend and it dropped. Opening price is here, closing price is around almost here. So if you think this as buy candle, what you do, this is the opening price opening price is around here, somewhere around here, and the closing price is around here. That's first candle. So both the sides, the opening and the closing price should be covered. Opening and the closing price should be covered. So when you see that in that way, it can give you some more advantage. You will not miss anything. The idea is when the candle forms, so all together when a trend forms, so it takes that opening price. So you should not miss the opening price and closing price. Obviously we are covering lows and highs. So that is the rule of drawing zones correctly. So that is why I asked you to watch those support and resistance, basics of candle patterns. The next thing is the high lows, which is very important, which I have shown you to forecast and see things in the future. So candle patterns, I do not watch too many candle patterns, but I stick to only 3. The top one which I use is pin bar, or the price which gets rejected, the closing price or opening price forms at that resistance. You can see here, it's a nice pin bar, it's a hammer similar. You can see the price rejection and going down. Likewise in demand and support area, you can see the price rejected and going up. You see opening price or closing price here. There's a strong rejection of pin bar and hammer. From there it goes. So when a demand zone or supply zone, when the price gets rejected and forms a huge pin bar or such patterns, so that would be of very obvious and very good patterns to trade and get confirmations. Obviously all this should be in higher time frames. At least it should be in weekly, daily and H4. So when you know these patterns, only these patterns occur mostly in the higher time frames, you can use this a lot. So the topmost pattern is pin bar, which is a doji and etc. It covers everything. The doji, these types, and the bullish and bearish piercing. It pierces at a support region and it goes up. The pierces on top, you can see there. From there it drops and again it continues to go. Third one is engulfing. The whole price, it engulfs the previous candle and goes up. It's a very good confirmation of buy signal. Likewise in bearish, it drops and engulfs the whole candle highs and lows. From there it continues to go down. These are the patterns which I use. I do not want to go deep into this basic candle patterns, but I want to show you which pattern which I see and I have tested, which is working most. And other patterns, if you are looking into bigger time frames, those all comes into this patterns automatically if you are using this. Let's say if you are using some other smaller patterns like pin bar, if it is in a smaller time frame, but in like H1, H4, if it gives pin bar or doji, but if you're seeing in daily, it shows engulfing. But we do not see that smaller patterns here, but it gets covered in this whole pattern when you're seeing in daily. What I mean is, when you're seeing into daily, these 3 or 4 patterns alone is enough. So to get confirmation when these patterns, when it is occurring at this crucial support and resistance, that is utmost importance, or any level that you see, from there it gets rejections. If you get confirmations, that is what I see as very good trade entries or very good confirmation. So as I was explaining about that, the trend, about the first trend, how to see in an opposite way. I mean, the first trend, if it is a buy, look it as a sell trend as well. If it is a sell, look it as a buy trend as well. So this is the reason, because if you're drawing zones on top, this is the rule. If you're drawing zones at bottom, I mean, if you're finding a support, if you're finding a resistance, use 2 lines, and this is how you should do it. The zone top, the first line, highest price, always take the highest price. If it is in the lowest price, you take the lowest price. The next line, it must cover at least one opening and closing price. It should cover at least one. There is an opening price, there is a closing price. Closing price, there is an opening price. Same here. There is an opening price, there is a closing price. It should cover both. So if you do that, then it's a perfect place and perfect setup to look into trades. When the future market, when it comes to that place, it gives some very good advantage for us to look into. In gold daily, I have taken this low and this high, the first trend. Obviously we are going to take the lowest price, the highest price. The next opening is here, I mean the opening price is here, the closing price is here. So both are covered. I'm going to draw a line there and see the future price, how it reacts there. The same here. There's a closing price, there is opening price. Both are covered. At least one closing and pricing should be covered. Let's say if I'm taking this and to try to find this trend. Actually, this is highest one, so I'm going to take that. The highest price, this is the lowest price, already I have marked. So check for the first. By first time in at least any one. There is a closing price here, there is a opening price here. You can check with the line charts. There is a closing price, at least one closing price, and after that see if there is any opening price. Yes, the candle had opened here actually. So both are covered, the highest covered, then it is really good. If you check into the future markets, market touches here, drops, market touches here, it holds, and after that goes up. We saw a lot of movements at this price. So this is how we draw that, the zone, and consider this as one big candle. From here to here, it's one candle actually. And from here to here, it's one candle. In that candle, we are taking the highs, lows, on the both the sides we are covering the opening and closing price. So in between the body, all this pattern occurs. When it breaks here, it goes up. When it breaks down, it goes up. That's how we decide based on the other confirmations. Only if it breaks here, if it breaks here, we can decide. This is why it is very important. You can see here the engulfing and piercing pattern here. See at the bottom level, the price, there is a doji formation. The price it hunts the low, and after that there is a big buy. It goes up. There is a confirmation using the candlestick pattern. So pin bar rejection on top, and after that it started to drop. So it's a confirmation. You can see one more pin bar here. You can take some trade and place some stops here or here. It's a very good rejection at the resistance level. Here, like the same, there is a huge rejection, pierced down, and after that there is a retest. Also, it's going down. So it's a very, very important rejection area. The candlesticks are giving confirmations here. This is how you should be looking into the markets, by taking the trend, marking the highs and lows. Here I have not shown anything about that quarterly high, low and all. So you can mark that lines, you can check. It will give some amazing results for sure. Okay, let's do a quick recap. And in first two videos what I have shown is how the trend, the first one, it goes up, it comes down, how it forms a triangle. Here goes up, down, it forms a triangle. Again it goes up, breaks this high, one more triangle, again goes down, there is one more triangle. So how the triangle geometry and max, it rules on how the pattern it keeps on repeating. And when you're looking at the highs, we should be looking at the price, which is the reason to break that highs. This is the low, which is reason it broke this highs and went up. So these are the important elements you should be watching. For example, if you're taking this high, which is the reason, this is the reason it broke up and went high. So this is important. You're trading and considering this. When you are trading this, you should be looking at this first trend alone. So when you are trading this, you should be looking at this first trend alone. What is the reason? Here it started, here it dropped. So this trend you can check, and from based on that you can decide here. So in this you can see, you can rewatch it again, how I use the candlesticks patterns, support resistance characters, how it behaves in support resistance, how the confirmations we get here, and how to draw the zones here at the bottom, on the top, and looking at it as one big candle. So do make sure you note it down, all those things, and keep it in your mind, and so you can revise it well or rewatch the video multiple times, as much as you can, until you understand the concept. Try to practice more in your charts. And if you have any doubts, you know where to contact me. You can contact me in my Telegram. This is my ID. You can reach me here. So next video I'll be covering a lot of new patterns and most important entries and etc. Be sure to watch that. Take care. See you in the next video.